Hey, Alpha fam, welcome back to another episode of Alpha Commission. Today on Alpha Commission, of course, we are going to go over the red on the charts, and this is mainly due to a pullback today after a nice, not the biggest pump in the world, but a nice pump yesterday off that kind of double bottom that most of these markets were getting, at least on the local level, as the S&P 500 and some of these other exchanges deal with the quadruple witching that occurred on Friday. If you didn't see my quadruple witching episodes, please check it out. Of course, this happens only, I believe, 4 times per year, and basically, it's just four different sets of options expiring at the same time, on the same date rather, and so the end of the day can be extremely volatile. The market may be very unpredictable. From the weekend to the following Monday, and so a lot of the market may get settled on Monday and Tuesday and decide what's really going on. Now, typically speaking, you do see markets being down after a quadruple witching, and that can tend to linger on for a little while. So that's going to take us into the Jerome Powell meeting on next Wednesday, September 21st, which will be the big event. Not much going on before that in terms of news. If you're in real estate, there's a bunch of home building and existing home sales data coming out, which you may want to be aware of. But in general, the key point here was the CPI data that came out last Tuesday, which was just awful, with the core CPI month to month basically doubling, just shocking the market. And then, of course, the year over year doing worse than expected, pretty significantly. We can tolerate a zero point 0.1 difference, maybe a zero point 0.2 difference, but zero point 0.3 difference was just a bridge too far. However, we did get some data on Friday from the University of Michigan, which did suggest, in their estimation, that a 5-year expectation is a little bit down. So they had previously 2.9, and now they measure it as 2.8. So that does suggest that, at least from a 5-year perspective, if not a year over year perspective, and if definitely not a month over month perspective, well, at least the 5-year expectation is that we're still peaking on inflation, and while that may look down the road, it can calm the nerves of the market just a little bit, guys. The University of Michigan also put out their consumer sentiment index, and so expectation was 60. Last measure was 58.2, and so we're basically at 59.5. So right in the same ballpark. Basically, not a great feeling, but not the worst. So people are still generally optimistic, but they do fear what's coming up next, right? Guys, let's jump to the charts. Of course, on Friday, I was suggesting that what we were likely to see back here was a dip, right? So this was a little bit of that witching behavior, right? We do see this kind of, just up and down, this kind of turbulence, right? I was suggesting that we were likely to see a dip down to this 3850 level, and then a pump up to the 3900. And then if the day had allowed us to go longer on Friday, then perhaps over 3900, maybe challenging some of these upper levels on the S&P 500, and then boomeranging back down. Will that happen on Monday and Tuesday before the Fed decision on Wednesday, so that market makers can kind of shake out some of the market, make a clean slate, grab a bunch of liquidity, before the Fed basically states their opinion? I don't know, but this looks fairly bullish to me, guys. And so I just want to point out that we did call that, and boom, we got that trade right off that double bottom, and that was just a great call over here at Alpha Commission. Congratulations to anyone who dared to take that on the quadruple witching. Of course, I did not recommend that swing traders take that trade just because it is way too volatile. But if you're a sniper, knowing where that maximum pain point is in the market, which was 3,900, kind of gives you that secret edge, right? If market makers were going to come back to the max pain point before the close of the quadruple witching, then you could have counted on, wherever we were in the charts, were we up here or were we down here, that we were likely to make a beeline for 3,900. And then, of course, next week we'll find out what the real price action is. This, of course, transferred over to Bitcoin, which itself, boom, right? Boom, we got that trade as well because basically Bitcoin trades like a tech meme stock, right? And so, whatever the S&P and the Nasdaq are doing, Bitcoin will basically do the same thing. And so, while Bitcoin was drifting down here, as the Nasdaq and the S&P were drifting down, we did just follow along this kind of broadening wedge, this kind of descending channel here, and when we reached the bottom, of course, that was the suggestion that it could come up to the top, and then there would be a high likelihood of breaking out because the stock market was pushing towards that 3,900 point, right? And so that's why we find Bitcoin did in fact break out. There is more liquidity to the upside right now than the downside. The markets did grab that downside liquidity already, and so this looks like a retest of the breakout if you are following Bitcoin. But again, guys, like we're still in that kind of quadruple witching atmosphere. And so Monday and Tuesday, as it leads up also into the Fed's decision on Wednesday, all of this could just have a bunch of unpredictable volatility. And this thing could come smashing down. So it's up to you and your risk tolerance, but we do have a little bit of a Bart Simpson head, kind of like this, right? That's Bart Simpson's haircut, and then it came down. We're doing it again. Could we pop up, maybe to this diagonal that we have on Bitcoin, right? That's kind of been respecting and kind of rejecting off of recently. Well, that's possible. But in the overall context of what's going on, these are our CME gaps. Of course, I color them purple so that you always know that's a CME gap. And then, in the overall context of the market, we do have just this macro downtrend. And as I pointed out on various other episodes, right? That we basically reflected off of the top of this macro downtrend, which does have incredible force to just knock us on our butts. And, while the quadruple witching may be making all of this quite complicated right now, while the upcoming decision by the Federal Reserve may be making this all very complicated right now, so it's not as clear cut as this rejection off of the diagonal in our previous zone higher up. We are getting something very similar where we basically rejected off of the macro trend line instead of the diagonal line, and so that did cause a little bit of a fake out to the upside. Everyone got excited because there was the possibility that for the first time in months and months and months, it was the first time we had the opportunity to challenge this downtrend, and there's only been one other opportunity back here in March when people also started to fill with hopium. But of course, being significantly down in the charts, it's more likely that we're going to eventually break this downtrend the further down we go, right? Because all downtrends have to end at some point. You can't just go straight down. This is trading. At some point, you break the trend, and then you have some type of mean reversion to the upside, which could be huge. And so, of course, we want to prepare everyone for that, but we also have to be mindful of the possible continuation to the downside and that markets could get worse before they get better. But guys, look, there was only one previous chance to break that downtrend. There wasn't even a second chance. This was our second chance to break that downtrend. And so you do have to forgive part of the market for getting excited, because if we had any chance at all to turn around this market or to just get a really, really great run to the upside, which we've been lacking for so long, that would have been the moment. And so please understand why, so many people in this market were basically preparing for that, including myself, even though we knew the risk was of a deflection, just like right here, right? That was the most likely outcome, especially if you look at the macro on the stock market. However, we have a lot of bottoming indications these days on Bitcoin and crypto, and so it all depended on whether or not the Federal Reserve was going to put in a pivot, and if inflation had reached peak inflation, meaning that inflation was not going to significantly increase anymore. But all of that was dashed, right? All of that was dashed when we got that bad core CPI date of basically inflation doubling month over month and significantly being out of line with expectations year over year. And so that's why the markets just tanked. We were all prepared for a possible Fed pivot, a possible change in the macro, but the CPI data is what the CPI data is. We're just regular traders, we're just regular human beings, we're not government insiders. And so nobody knew for sure what was going to happen, and we had to prepare both ways. And so, guys, just as a thought problem, if you wanted to have bullishness, what would you expect? What would you need to happen? Just think about that question. If you wanted to see bullishness in this chart, what would you need to see happen? Okay, I'm just going to leave that question there. And this basically line of thinking, right? This storytelling here is prompted by one of the people in the group. You can find the link to the Discord. We just have a forum where we just chat. If you're interested in these type of things, you can go ahead and sign up to the Discord, the Alpha Commission Discord. It's free. You just register with Discord, and you can just join the group using that link that I provide. And so if you like these videos, then go ahead and come to the group and just chat with us. Sometimes you get some interesting insights, and some people share their indicators and other things like that. And so that's just to beat the loneliness of a bear market. If any of you feel a little bit lost, just a little bit confused what's going on, go ahead and join the Discord, and we'll just chat with you there, guys. But that's the question. What would you need to see to make this chart bullish? And John was asking, if we hold 20K like so strongly, right? We're just holding this level, holding this level. Does that suggest some possible strength in the market? And, it is possible that we've bottomed out. Again, there are lots of indications, lots of bottoming indications starting to come in, including the hash rates and various, bottom indicators. And of course, just a whole bunch of things that could suggest that we're approaching a bottom, if not already having reached it, right? And a lot of people, especially the perma bulls, right, will make a very strong case for that. I'm not going to make the case that it is the bottom. I have shown you indications of why it could be the bottom, including on the stock market, including that market breadth width, which had a 100% hit rate of calling the market bottoms. And so there is a lot of good reason to think that maybe we have bottomed out. But guys, you just have to take this stuff with a grain of salt, because we are in a new era where the Fed cannot inject liquidity into the markets. And so while those indicators always worked in times when the Fed was able to inject liquidity into the market and come save the market, that may have just been the Fed's bottom before they took action, right? So maybe now we're going to find out what the market's bottom is if it doesn't have the Fed to come in and save its butt, right? So we may find there's a difference between our indicators on the macro in an environment where there's no Fed to come to the rescue. Okay, like we're on our own now, so we're gonna find out what the market's real price is that it can tolerate, not the one subsidized by money printing and infinite 0% loans and all of this stuff that just basically throws free money at millionaires and billionaires to buy up stuff like crypto, right? So, guys, let's just do a thought problem by looking back in the history of Bitcoin to see what happens when Bitcoin holds holds a level for a very long time. And what you can see here is that back in 2018, we reached the bottom of like 6,000 to 5,000, and then we had a huge bounce. We came back to 6,000 to 5,000, had a huge bounce, came back to 6,000 to 5,000, had a nice bounce, 6,000 to 5,000, nice bounce, hung out at 6,000 to 5,000 for months. Guys, this was like 9 months, right? 8 or 9 months, maybe 10 months at this level. And so everyone thought, oh, okay, Bitcoin had its blow off top. It came to a bottom. It stabilized in that area. It held that area for, almost like 3 months, and then like 6 months, and then like 8 months, and 9 months, and like almost 10 months, right? It held that level. And so for almost a full year, people were like, come on, Bitcoin's not going any lower. It's been an entire year almost, and we've never gone lower than 6,000 to 5,000. For an entire year, guys, we held one level. And then what happened? Suddenly, boom, a drop of 50%, maybe 51%, right? We dropped 50%. And so everybody started to come back into the market thinking, oh, this is the bottom. Bitcoin's never going to go lower than 5,000. I'm a new guy in crypto. Let me put my life savings into Bitcoin. And that's how they get you, right? That's how they get you. Meanwhile, what was the signal from the market makers to all the professional traders and everyone that they're coordinating with, all of this stuff? Well, what do you see here? I mean, guys, is this not a distribution wedge, right? If you're an experienced trader, anybody with experience should not have lost money in this epoch of Bitcoin, because they should have known what is a distribution wedge, right? Boom, 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 right? Distribution wedge, right? So, guys, like if this thing just came plummeting down because there was a macro distribution wedge, right, coming off of a macro top. And so we probably should have believed the TA as opposed to just believing the hopium, without any type of proof of a market turnaround, without any type of proof, right? Any type of proof of a downtrend being broken. People put their life savings into Bitcoin, trading these huge swings, which is fine. You can trade swings, but then when people DCA'd in their life savings, they got absolutely shreked, right? And so, guys, this is how the market takes all of your money, right? It takes all of your hard-earned money before it starts to put in one of these accumulation patterns, right? Which you can kind of see basically the opposite going on here. Let me go ahead and just make that a little bit more glaringly obvious for you guys. So you can see here, now we have the opposite of this triangle, right? I mean, it's not the most pretty one, but we can kind of adjust it. That looks better. And so what you can see is now we have this type of accumulation going on here, right? Boom, 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 right? So guys, like everyone was able to, basically, make some profit off of this accumulation wedge if only they had waited for a bullish pattern and bullish signals and a breakout of the downtrend here. You didn't even need to use other things like EMAs, but you throw your EMAs on top of it, right? And then you can just see that basically it was all bearish here, and then it started to turn bullish, especially if you put it on the weekly. All right, and on the weekly, you can see that that level was very clearly underneath the red and the pink ribbons. And here we actually broke above the red and the pink ribbons. And so you can see that we did go from bearish, right, from bearish to bullish crossings on these EMAs where look, we had the red on top, the pink and the red on top, and the yellow was below. We squeezed down, kept squeezing down, kept being repressed underneath the red and the pink EMA, kept being repressed under the red and the pink EMA, started to squeeze up, got above the pink EMA, got above the red EMA, got above the yellow EMA. Now it's bullishly postured, and then boom. Okay? Boom. And that was the bottom of the market. All you had to do was look for a bullish macro pattern and then also use your EMAs. I've also showed you how to use your RSI, but we won't go over that for the purpose of this. But basically, you can see on the 2 week that we basically had some kind of a falling wedges here, which did break to the upside, right? And so, guys, that's basically how to use macro patterns, your EMAs, and then also, of course, your RSI, which I covered in detail in multiple episodes just recently, in order to find that bottom of the market. And that's the kind of thing that you want to see going on in Bitcoin if you're going to consider that this might be the bottom. And so what do we have here? Well, here we're underneath our pink EMA. We're underneath our red EMA. We're underneath our yellow EMA, and we are just repressed, repressed, repressed under those things. And so there is nothing, right? There's nothing, pardon me, I'm on the 2 week. Here's the weekly. There's nothing that suggests that we are over the pink or the red EMA, which would even suggest some type of bullishness to possibly take out this yellow one. And so, look, have you noticed that that yellow one kind of lines up with our macro downtrend? Like that's, these EMAs are legit, guys. Like we have to get above that yellow EMA. We have to break out of this yellow downtrend. So I'm going to turn off the EMAs because you understand, like we are not breaking them bullishly, okay? And then you look at this downtrend, what would a breakout of the downtrend be, right? Well, we have this diagonal, right? We got rejected from it here. We got rejected from it up here. So what would we have to do? First, we would have to take out our diagonal, right? That just this local teal diagonal right here, we'd have to take that out. And then we'd have to take out our macro downtrend. So also we would have to take out right there. But then, guys, if we only reached this level of like 23,000 breaking out of those things, like we would still have a lower high than this previous high. And so, in fact, the level that we have to beat is going to be right here, which is going to be this 25,000. We have to get price action on top of 25,000. Then we have a higher low and we'll have a higher high. So this is a low, a little bit higher low, this is a high, and then a little bit higher high, we will have an uptrend. And then guys, if you ever see us hanging out above 25K, right? And if we didn't make a lower low yet, then basically we will be in an uptrend. We will have broken our macro downtrend. We will have broken our local, kind of suppression line here. And so, guys, like that's what you're looking for in terms of bullishness. And additionally, we will be on top of that yellow EMA. So, guys, look how this all gels together. I hope that you're learning something. I hope you find this content valuable. If you like this, please, hit like and subscribe. Consider to join the Discord if you'd like. But guys, other than this, is there any reason why, right? Is there any way, sort of like how we had this wedge back here that gave us a heads up that we were going to drop 50%? Did we have any heads up, back here, back in the day, like when we were at the top of the market? Yeah, of course, we started to squeeze negatively. But, what does that tell me about where the bottom is? Okay, well, you just kind of preserve your liquidity first. Let's go back to the daily chart and then let's turn off these EMAs and let's just look at the price action and see what the price action is doing, okay? Well, do you see anything here that could have just been glaringly obvious from 69K, down to 17.5K, right? Well, if you're me, then what you see is basically a macro head and shoulders, guys, like a macro head and shoulders. And so basically, when everyone was screaming that, 30K was the bottom, 30K was the bottom, or 35K, whatever, what I was looking at, and the reason why I had like fights and arguments with guys, not to tell people to accumulate in this area that no, whatever you're accumulating at these prices is not likely to be a good deal, is that not only was our EMAs really, really awful, okay, on the macro, right? And that was a huge issue. Not only was our RSI really, really bad and ugly on the macro, like why would you be telling people to like accumulate and DCA there, right? I was saying like we could trade here and trade here for the bounces on this range. And I told everyone to get the F out. And I told people do not DCA unless you're willing to hold for 3 years because you may never get your money back in any reasonable amount of time. And I literally fought with people about this issue. And I was dead right. And I saved a lot of people's asses. And I won't apologize for that. But back in that day, I was a little bit aggressive in how I approached some of that, and I felt ganged up on because there were just so many people around me, and I just felt so strongly about this, and a couple other things, that just maybe there's a better way to say it, and so that's one of the reasons why I've been trying to improve on this channel so that I can help people. Right, and help people learn what I had to learn through the hard way in previous times, um, and now we can just learn together, hopefully. And you can share your thoughts in the Discord, and of course, you can also leave your comments in the video, comments area if you'd just like to contribute anything, or if you think I'm wrong on anything. But guys, basically, this is what I was seeing, right? On top of the EMAs, on top of the RSI, we had this macro head and shoulders, and this was a valid head and shoulders. And a lot of people say, oh, head and shoulders, they don't work out that often on Bitcoin. No, they do. They absolutely do work out almost all the time on Bitcoin. What happens is people get confused by they get confused by uh, descending wedges. Basically, they get confused by broadening descending wedges and broadening rising wedges, which most people are just not familiar with. They don't know how to trade that pattern, and so they think the head and shoulders doesn't work out. But in fact, they're just confused by a different pattern that looks very, very similar to head and shoulders, but it's not a head and shoulders. And so that's why people think that head and shoulders don't work out. But if we look at this macro head and shoulders, right, which is just as glaringly obvious as what we saw in 2018, right, where the market was basically telling you, like, we have a macro distribution wedge. Maybe you guys shouldn't be idiots, and maybe you should, learn how to trade and get the F out of the market, or I'm going to take your money. It's like a ticking time bomb. Tick, 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 tick. And then this price action was basically flat for months, and that was like the alarm going off. Like the market makers were just telling you, we're gonna take every dime of your money. You may want to get out. And having completed this distribution wedge, it basically got distributed all over your faces, and you basically lost 50% of your money, probably got terrified, chased out of the market, and then having seen all that, right, and having set that perhaps in motion, to be honest, the exchanges and the miners, in control, then of course all these institutions came in and they said, wow, like look at the blood in the water, I want to buy that. And so they just bought back in, and then we had another ticking time bomb, right? Tick, 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 tick. Ring, 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 right? We're about to fire off. We're about to go nuclear. The nuclear bomb is about to go off, and we just exploded to the upside. And all you had to do was be able to recognize a triangle. And you could have saved your entire life savings and you could have doubled or tripled or whatever it, right? So guys, like, this is the power of TA. This is why I make this channel. We are going to grab these moves in the future. Alpha fam, you are going to be with us while we make all of this money. And in the meantime, I just ask for patience. I just ask for you to have patience. Every single one of you guys is like trying to trade every single little move. And look, all we had to wait for was this head and shoulders to play out. Okay? We saw this move, and like a ticking time bomb, tick, 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 the head and shoulders was complete. And then alarm bells, ring, 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 should have been going off. And then we started to capitulate, 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 capitulate. And maybe there's going to be another round of capitulation before this pattern is fully played out. Okay. And so, in the meantime, of course, we need to make episodes. We need to talk about stuff. Of course, there are moves to be traded, but that doesn't mean that you should have put your life savings into any of these levels, which of course is why I made my Alpha Origin channels in order to protect you guys. Guys, I've been thinking about you the entire time, and so, I know, like, why would I make this stuff, something visually, easy to look at, right? Why would I be talking about, just kind of shorthands even? Like, if I wasn't trying to protect you guys, why would I have my bloodline down here, right? If I wasn't trying to protect you guys from the harshness of this market. And so, while I do think that we could go as low as 8,000, because of course we do have CME gaps there, we have that Binance scam wick. We have like the bottom of the market. If you draw like diagonals, and if we just have some like crazy thing, like the line like actually like lines up like into that like lower area kind of thing. Sorry, this is on log just for my origin channels here. But basically, if you do it on the real chart on linear, it lines up with that $7,000 to $8,000 area. And so yes, I do think that there should be some bias to the downside, which is essentially that we could find a bottom at 14, 15K, but there could be a couple levels lower, like 12K, 11K, or even 10K to 7K. That's hypothetically possible. But the most likely spot is probably going to be this 14 to 16K area. And, if you just want to go by the bloodline, which has been a great spot to buy historically, multiple times in a row, then, I can't just prevent you from DCAing in here if you do have a theory of the market. But now, guys, let's go back to the question that I asked at the beginning of all of this, which is what would you need to see to be bullish, right? And what we would need to see is let me get out of log. There we go. What we would need to see is the RSI putting in one of those patterns that I suggested, right? That I've been talking about multiple episodes for months. Been talking about these type of wedges, and look, on the 2 weeks we are starting to put in that formation. There could be one more drop down till we get to the tip of this, or like somewhere in here, or just confirm something, right? And then we bounce up. But overall, we're getting into that kind of juicy region. We're at those juicy levels as before. This could be the bottom, but just be aware that this wedge formation, right, which worked in the past, suggests that there could be another leg down. Okay, just be aware of that. Okay, be aware of that. Be aware that on the weekly, our EMAs, right, haven't crossed bullishly yet. And so, guys, like, if you just want to like protect all of your money, right, just look at the EMAs, and when the red line is above the yellow line, then you can know that there's a good chance that we're turning around. Look, it didn't happen here. That wasn't a market turnaround. We dropped right? But look, it happened here. The red line is above the yellow line, and look what happened. Bull market, right? Red line above the yellow line, bull market. So all you have to wait is for these two lines to cross over each other, and you can be fine, right? More or less fine. And guys, here's my setup in case you're wondering what do I use. These are the lines that are active, but I do use all of these ones. You only need like a couple of these ones. If I was just to suggest to you which ones to use, these are the ones that I would recommend. Okay, so basically EMA2, EMA3, EMA5, 7, and the MA4. And what this is that's the 9 EMA, the 21 EMA, basically the 50 EMA. Okay, you don't have to use 47. You can use 50 like normal people do. And then the 200 EMA and the 200 MA. Okay, just to get an idea of what's going on in the chart. And then you can see whether we're squeezing to the downside or whether we're squeezing to the upside, okay? And right now we're just continuing ever since back here to squeeze to the downside. As you learn your EMAs, this will become much more obvious. And I'm looking at the weekly. And so until the weekly starts squeezing to the upside, like there's no reason for you to even worry about where you should put all your money. Like, just don't put all your money anywhere. Just do small trades. Like, that's it. Okay. Like, just protect yourself, Alpha Fam. Okay. I mean, yeah, we could pump, but if you want a confirmation, then you're going to wait for that cross. Okay. Like, because look what happens when it doesn't confirm. It can drop you to hell suddenly, dramatically, and you can just be completely wrecked, just like what I showed you in 2018, okay? Like these people didn't wait for the EMAs to cross. They just decided, oh, I think this is the bottom of the market, right? Like a lot of people right now are thinking, I think 20K is the bottom of the market. Well, I'm sorry, but your EMAs didn't cross, right? There's no confirmation. So look where they crossed, guys. You know, yes, the EMAs were a little bit slow, okay? Like you could have missed this move, but you saw they were pinching together. You saw this accumulation wedge. You saw the RSI, and so you put all of these things together, and then you're bullishly on top. You could take a chance on a trade, just know that you have to be ready to sell in case it backfires, right? That's all, right? You have to be ready to take a loss, or you can just wait until they actually do cross, and then you can capture all of this move. Like, okay, you missed this move, sorry, but you got all of this move. Okay, like, were you really like are you really in that much pain that if you miss one candle you're really gonna are you gonna go crying to your mommy because of that? Like, guys, like, waiting for confirmation, like, that's what big boys do. Okay, like, if you miss a candle, don't go crying to your mommy. Okay, she's not gonna hold your hand while you're doing your trades. Okay, like, it's okay to protect your family's money, right? To protect your money, to protect your future, to protect the potential of you to be able to live your life the way that you want, financially secure, right? And to be able to offer anything to anyone else, right? By waiting for a confirmation. You do not have to get the absolute Pico bottom. It's okay if you miss a candle. If you just wait for this crossing, you are going to be so much better off than 90% of the market who are just idiots trying to guess the bottom, and then they lost 50% of everything they owned that they put in this market. Okay, and then they got scared and left the market, and then somebody else bought it all up and then ran it up, and they were gone, right? They lost everything. Guys, like, these are the lessons that I'm trying to teach you just to make sure that people are protected, okay? Like, there's a reason I call it the Alpha Fam, okay? Like, I also talk with the AR fam, right? I have my buddy Crypto Retta, right? And so we have friends, right? We have family, we have people that are involved in these markets, right? They have their life savings there, they have their retirement there, and guys, like, we're just trying to keep you safe during the bear market. We're not trying to be moon boys, right? Like some of those guys. We're not trying to shill anything, sell you anything. I don't have any type of ads running. And so, while, that would be nice for the future, like I understand, like everyone is hurting right now. And so I'm just trying for an entire year, I've just been trying to protect you while I see what I see. And so we've been calling like these bear flags on the way down. If we jump to the daily, you can see that there's a whole bunch of bear flags. But what is it really? It's just this macro head and shoulders playing out, guys. Okay, it's just the EMAs playing out. It's just the RSI playing out. Okay, guys, like that's what's going on. And these are the lessons that I'm trying to teach you. And so if you want to enter the market based on structural things, right, and take a bigger risk, break this downtrend, break this, diagonal, right, and then get on top of your EMAs and get on top of a 2500 securely, right? Securely, and then you can consider on the next pullback, right, to get in, or if this thing just goes for it, then you can consider to take a risky move. But you may end up missing one candle. But the thing is, you may grab the turnaround in the market, right? And so far, we're just not there. We're just not there, and we're looking quite weak. And also, the measured move is a little bit further down. There's bear flags that suggest further down, and there's just a lot of reasons in the stock market and in the macroeconomy that suggest the possibility of further down. So I'm just trying to protect you. As long as we were above this diagonal, as long as we were pushing up against this yellow line and challenging it, right? Like challenging it to a duel to see who's going to win, as long as we had the momentum to the upside, right? As long as we were pushing to the upside, like we could have been surprised to have a breakout and to just skyrocket. We could have had a short squeeze that broke out and just popped up to that next level. And so yes, I was optimistic for that. Yes, I did try to prepare for that. No, I did not believe that it would happen. No, I was not religious about it. No, I am not a perma bear. No, I am not a perma bull. I am just trying to be a clever little alpha monkey, right? Just trying to use my brain, right, my human brain, to try to figure out what we can take advantage of. Should we go up? Should we break this yellow line? And then, of course, how to protect ourselves if we do cross this diagonal, right? This line in the sand. Should we have broken to the downside? And we did break to the downside. But as of today, we're once again catching some support. You guys understand my macro analysis, right, about the weakness in the economy, but that doesn't mean that on the smaller time frames, if we jump down to like 1 hour, because we've been looking at the weekly and the 2 week, right, like and the daily and above, basically. But if you take a look at what's going on here, we had like a little bull flag. We basically have this, kind of like janky kind of descending channel, descending wedge thing that could suggest maybe we pop up a little bit higher. If not, we have a little bit of a BART pattern, which suggests maybe, we could recapture some of this candle before perhaps getting deflected off of this diagonal. So, if we did do something like this, it wouldn't be surprising to me if we did something like this. And then if the Fed on the 21st just completely wrecked us, right? Like, like that could happen, right? Or the Fed could come out with some like just amazingly good news, right? And then we do something like this, okay? Or if we just go sideways, okay, and then this is the potential, area. It's just that would take quite a bit of time, and so I just think that probably the Fed moment is going to come, and maybe the market's going to want to push up before it potentially dumps down or breaks out. So this is just a hypothesis, no guarantees on that. This is good that we're breaking out of this. We could just go sideways until the 21st and then dump or pump. Um, but we have to see, guys. We have to see. Okay. I told you on Friday, right? I told you on Friday morning before the markets opened that I expected us to go down to these levels, and then I expected us to pump after that, and that's exactly what we did. I was using the S&P for that. Then I suggested that where we closed on Friday in the traditional markets, that most likely we would have bullishness in the charts during the weekend and perhaps into Monday, and that's what we're getting. And then Monday and Tuesday are going to be just too rich for my blood, guys. It's going to be too volatile. Then the Fed on Wednesday, And so I recommend just seeing what the data is. And again, like if we get 100 basis points on Wednesday, probably markets will tank, absolutely tank. And if we get 75 basis points, then it's kind of a wild card. It's not good for the market. It's not terrible for the market. The market kind of has priced in that value already. And so maybe sideways or even we could go down or up. I just couldn't call that. Most likely there would be a little bit of a pump just because part of the market is expecting 100 basis points. But again, like if we get that 100 basis points, like we are just going to tank, guys. I believe that. Um, but I could be wrong. So you guys have to have your own theory of the market as well. Don't ever just listen to some, YouTuber and just believe everything that they say. Try to think about these things for yourself. I'm not here to try to make you dependent on me or anything. I'm teaching you these things so that you can do it yourself. Again, like the group is free, not charging you a cent for that stuff. I'm just trying to become a better trader myself, and hopefully trying to explain these things helps me absorb it for the longer term even better, and perhaps helps me take a look at some insights for myself as a trader, and that's what I'm getting out of it. Maybe in the future, the more work that I put into this, I'll consider how to compensate my time. I do miss a lot of trades making these videos, but you know, and to be honest, it can get quite stressful to try to keep up any type of a schedule with this stuff. It's just huge process, and so I don't know. I'll think about something, fair in the future, but I don't ever want to become like one of those complete idiots like, Crypto Ran and some of these other guys. I mean, those are nice entertainment channels, right? Kind of like watching comedies sometimes. They're pretty funny people. But, I'm trying to save people's butts, man. Like I'm trying to save your butt. I'm not trying to, do any funny business or anything like that. Guys, that's your alpha for the day. Not going to go over any other coins. It's the weekend. It's highly volatile. Everything is like up in the air. You understand, like this is like the chaos week, okay? Ever since the quadruple witching, and then we have on Friday, and then we have Jerome Powell on Wednesday. Like anything that I said could just be overrided, in a second, okay? So just understand that you don't have to take every trade unless you really see that excellent setup like what I gave on a Friday, okay? And I'm just not 100% there yet with anything else. I'm just not sure exactly what's going to happen, if there's going to be a leak. Somebody could leak some news on a Monday or Tuesday. They could get like a leaked information about what the Fed is going to do, and then some big players start dumping or pumping or something. And so it can just totally disrupt the entire market. Those type of leaks do happen occasionally. And so it's just protect yourself, guys. Just protect yourselves. That's your alpha for the day. Stay safe and happy trading.